The stock market has experienced a day of significant fluctuations and volatility. These fluctuations were primarily attributed to two key factors, such as rising oil prices and increasing treasury yields. These developments made investors question the attractiveness of stocks as an investment option, given the potential for higher returns in other asset classes. Amidst this backdrop, Peloton Interactive, which is a prominent fitness technology company, made headlines by announcing a major business deal. Peloton signed a 5-year partnership agreement with Lululemon Athletica, which is a leading athletic apparel brand. As a part of this partnership, Lululemon stopped selling its Studio Mirror exercise screen. Instead, Peloton became the exclusive provider of digital fitness content for Lululemon. In return, Lululemon became Peloton's primary partner for athletic apparel. This strategic move was aimed at leveraging each company's strengths to offer consumers a more holistic fitness and lifestyle experience. In other news, investors are worried about the U.S. government facing a critical funding deadline, with just 3 days left to pass a spending bill to avoid a federal government shutdown. The Senate had managed to reach a bipartisan agreement on a stopgap funding bill. This bill, if passed, would keep the government funded until November 17th. It also included substantial financial support, with $6.2 billion allocated for aid to Ukraine and an additional $6 billion designated for natural disaster relief. However, the key challenge was getting this bill approved by the House of Representatives, where political divisions and disagreements among themselves posed significant hurdles to its passage. In the event of a government shutdown, thousands of federal workers and 1.3 million active-duty military members could face delayed paychecks. Some workers might be furloughed, while essential personnel like the military, law enforcement, firefighters, and TSA would be required to work without immediate compensation. The impact would also extend to various government agencies, such as the FDA and OSHA, which might need to limit their operations, potentially affecting public services and programs. It's worth noting that a government shutdown typically results from Congress's inability to agree on a budget or spending plan, leading to the cessation of non-essential government functions. In contrast, essential services and programs like Medicare, Medicaid, Social Security, and the Postal Service would continue to operate since they are funded differently. In other stock news, Crispr Therapeutics faces a crucial moment in December when the Food and Drug Administration will decide whether to approve exa-cel, a gene-edited drug developed in partnership with Vertex Pharmaceuticals. If approved, this drug could provide a permanent solution for patients with severe sickle cell disease, making it the first ever drug approved using CRISPR gene editing technology. Such an approval could have a significant impact on the biotech industry, which has faced challenges in recent years. Exa-cel has shown promising results in clinical trials, with potential benefits for patients with sickle cell disease and beta thalassemia. Despite these positive outcomes, CRSP stock has experienced a decline this year, even as Vertex stock has risen. Analysts expect FDA approval for exa-cel, but anticipate that it may not lead to a significant change in biotech stock valuations. One challenge for gene-edited drugs like exa-cel is the need to condition patients' bodies to accept the treatment, which can have side effects. However, CRISPR is working on a gentler conditioning regimen and exploring applications in cancer treatments, particularly CAR-T therapy using allogeneic donor cells. Investors are also watching CRISPR's efforts in heart disease, oncology, and type 1 diabetes, with the company aiming to address diseases in innovative ways. Despite recent stock performance challenges, CRISPR sees numerous catalysts ahead and envisions a future with multiple programs and clinical trials. Even with all this going on, an analyst named Gil Bloom from Needham maintained his buy rating on CRSP stock and set a price target of $88, which is much higher than its current price of $45 per share. This indicates his positive outlook on CRISPR Therapeutics and suggests that he believes the stock has the potential to reach $88 per share. It's important to note that price targets and ratings from analysts can influence investor sentiment and trading decisions. In other news, Frontline, which is a major player in seaborne transportation, reported its most robust second quarter profit since 2008. This impressive performance was primarily driven by the rising prices of crude oil. Frontline operates one of the largest fleets of oil tankers globally, with vessels ranging from very large crude carriers to smaller tankers. The company's financial report highlighted its profitability, with $230.7 million in profit during the last quarter. Frontline's strong financial position enabled it to declare a dividend, which stood out with an eye-catching annualized yield of 18.7%. These favorable results were also reflected in the company's stock performance, which appears poised for future growth. Now let's talk about GameStop. In the world of retail, Ryan Cohen, the largest individual investor in GameStop, made significant moves. Cohen recently took on the role of CEO at GameStop, which is a popular video game retailer. This transition followed his previous position as the company's board chairman. Notably, Cohen opted not to receive compensation for serving as president, CEO, and chairman. GameStop had been navigating a challenging landscape as technology disrupted the gaming industry. The company faced difficulties adapting to changing consumer preferences, particularly the shift from physical game discs to digital downloads. Cohen's appointment represented an effort to modernize and revitalize the company, given his successful track record as a co-founder of Chewy, an online pet supply company. We also have news about Elon Musk's SpaceX, which secured a significant contract with the Pentagon for its Starshield military satellite service. This contract encompasses end-to-end services, utilizing SpaceX's Starlink satellite constellation, along with the provision of user terminals, equipment, network management, and related services. This contract marked an expansion of SpaceX's involvement with the U.S. military. However, the contract was not without controversy. Some lawmakers criticized the Pentagon's association with Musk due to a recent incident where SpaceX reportedly denied internet service to Ukraine, which was planning a drone attack on Russia's navy. This raised questions about the ethical implications of such collaborations between private companies and defense organizations. In another recent update, Mark Zuckerberg, who is the CEO of Meta Platforms, continued to emphasize his commitment to the concept of the metaverse. At a VR developer conference, he demonstrated new artificial intelligence software and showcased Meta's latest virtual reality headset, the Quest 3, along with Ray-Ban smart glasses. Zuckerberg highlighted the progress made in developing technologies like holograms and displays. The broader context here is the ongoing race in Silicon Valley to advance artificial intelligence technologies. Companies like Meta and Google are competing with the rapid rise of OpenAI and its ChatGPT program, reflecting the growing importance of AI in various industries and applications. For automotive news, NIO, a Chinese electric vehicle manufacturer, made headlines with reports of exploratory talks with Mercedes-Benz Group AG regarding a potential strategic partnership. The discussions reportedly included Mercedes-Benz investing in NIO in exchange for access to technology. However, these talks had not progressed to a stage where specifics about technology transfer and financial terms were discussed. However, both NIO and Mercedes-Benz issued statements regarding the situation. NIO denied having talked to Mercedes-Benz about a collaboration, while Mercedes-Benz clarified that there were no plans for collaboration at the moment. These developments underscored the competitive landscape in the electric vehicle industry and the interest of established automakers in partnering with innovative EV companies like NIO. Lastly, here are some quick stock news updates. Jabil. The contract electronics manufacturer exceeded expectations with its fourth quarter adjusted earnings and provided guidance for the first quarter that surpassed estimates. Additionally, the company's board increased its share repurchase authorization to $2.5 billion. Next up, we have Chico's. The Florida-based fashion company saw its stock soar after announcing its acquisition by Sycamore Partners for $1 billion, signifying its transition to a privately held company. Our next story is about Workday. The cloud software company lowered its target for annual subscription revenue growth at an investor presentation. This adjustment reflected the company's outlook for the next 3 years, indicating a slightly slower growth rate than previously expected. You should also know that Accenture, the management consulting and technology company, reported fourth quarter revenue that fell short of Wall Street estimates. Additionally, its earnings guidance for the future was below consensus, leading to a decline in its stock price. Lastly, Micron Technology. The chipmaker reported a narrower than expected adjusted loss for the fiscal fourth quarter. However, its revenue significantly declined year over year. The company also provided a forecast for a larger than estimated loss in the first quarter, which resulted in a further decline in its stock price. If you want more stock market news updates, press the like button and subscribe. With that being said, thank you for watching and happy investing.